If you've ever wondered how professional traders make money from markets without owning a single stock, you're about to find out. Because in this video, I will show you how futures trading works, how it compares to stock trading and forex trading, and how you can learn everything about futures from the tools that I will show you in this video. Now, I've done a video that compares futures to CFDs where I dive deep into the details, but here I will just give you the overview of the differences between stocks, forex, and futures. So when you buy a stock, you are usually using an exchange to buy and sell this stock. Basically, it's a regulated industry. That means there is no cheating. The broker cannot play games with you, although every now and then we hear a scandal. But 99% of the time, the exchanges are heavily regulated. The drawback is there is no leverage in stocks. So basically, whatever cash you put, most likely you will get probably 2 to 1. Also, it's extremely hard to go short using stocks. And stocks exchanges close at some time, probably around 6 in the US, but it's definitely closed overnight and over the weekend. Now, forex trades 24 hours a day, closed on Saturday, and you can get extreme leverage, 500 to 1, because the game is not trading, the game is for the broker to take your money. This industry is not regulated. Brokers go bust all the time, or they just close their door. Now, some brokers in the forex industry are really reputable. For example, Interactive Brokers, Wanda. I'm sure there are more. Everybody else is a scammer. Basically, they are there to get your money. They give you high leverage because they know they're going to blow up the account. Now, I'm not here trying to push you away from forex. If you are a forex trader, you already know what I'm talking about. Most likely, you've lost 1 million accounts so far. And you keep trying because their advertising is really good and their leverage is so lucrative that human beings having a hard time to stay away from them. Then we come to futures. Futures are, again, heavily regulated industry, and it's leveraged to a point. So it's not like stocks and it's not like forex. It sits somewhere in the middle. But it trades on an exchange. That means the counterparty is guaranteed. At least so far, it has been guaranteed. So that means when you buy and sell on the exchange, you don't care who is on the other side because your money is guaranteed by the exchange. And like I said, they are heavily regulated, so there are less shenanigans. Although, again, every now and then there are some scandals. But overall, like over 98% of the time, you are in good hands in any regulated future exchange. And the main advantage is you can go short as easy as you can go long. But futures come with its own caveat, which is they expire, so you need to roll over the contract. And each future contract have a different point value. So, for example, pips in forex have, we know the value of that. And 1 cent in stocks, we know the value of that. But in futures, every contract has a different tick value or point value. And that's why most traders, beginner traders, stay away from futures because they think they are very risky or they are too complicated. But in this video, I will show you how easy it is and how it is the best vehicle for trading. And that's why every semi-professional, professional, all the way to hedge funds, they all use futures. Now, you don't need to learn everything about every futures market in the world. There are too many exchanges and too many markets. There are more than 100 liquid futures markets, and you don't need to understand all of them. So in the beginning, just focus on the 5 to 10, maybe 15 futures market that you are going to trade, and you need to get familiar with it. And the best way to start is on the CME exchange. CME Futures Exchange is one of the biggest futures exchanges on the planet, and also they have really good resources to learn about futures. This is the website for the CME Group. They own multiple exchanges, and if you go to the education section, click on courses and lessons, I highly recommend that you start with this one, Introduction to Futures. Now also it makes sense to select the topic, click on Futures. This will limit the filter to futures. Also notice that this is a course and this is a lesson. So in fact, all these lessons are inside this course. So you see this course is 18 lessons. Now every lesson is very concise. It's about 5 minutes and it's really simple for beginners to understand. And even if you are familiar with futures, it's actually a really good refresher for you. So this Introduction to Futures course, highly recommended. And just to give you an example, this is definition of futures contract. You get a video and you get the transcript, plus you get a simple quiz to test your knowledge. Now, if you filter on futures and courses, now it's going to show all courses. So once you finish Introduction to Futures, then you can get to know these futures. So trading, technical analysis. This is only about metals, so gold, silver, and then there are risk management, energy that includes oil and gas, agriculture that includes wheat. So you can start to dig deeper as you get more time in. But definitely this is the best one. Once you finish this and want to learn more, then click on Education, and now you can go to Trading Simulator. So this simulator is based on TradingView platform. So if you are a TradingView user, you will find this very familiar. And just to give you an idea, so for example, here I am looking at the S&P 500 E-mini futures. So if you click on the symbol here, you see I'm using ES. And ES is the root symbol for the S&P 500 E-mini futures. Now, each expiry month, as you will learn from the course, correspond to a month. And so, for example, for the S&P 500 and all indexes, they expire 4 times a year. And so here we have Z5, that means this is the last quarter of the year 25. And you can see here, this one expires December 25, expires March 26, June 26, and so on and so forth. Anyway, you click on it. These are the buy and sell. So here on the right, we have the sellers. Here we have the buyers. And this is the number of contracts available. I'm doing this here now after market. So that's why it's not moving. And depending on your platform, you'll have the way to see orders and the way to see positions and so on and so forth. And if this was live, you'll have buy and sell here. And again, you have buy and sell here. Again, this will highly depend on the platform. Now, in the trading simulator, you can still access the education part. So if you go to resources, education, then you can see a lot of videos and lessons that is related to what you are doing. So this might feel overwhelming in the beginning, but if you take the Introduction to Futures course, slowly train with the simulator and take more courses. They are all very small and they are built for beginners. And again, I have to emphasize here, you don't need to learn everything about futures. So first, focus on the index futures. So we have the S&P 500, the NASDAQ, the Dow Jones, and the Russell. These are 4 of the most liquid futures on earth, and actually can make a lot of money just by trading these futures. Now, futures contract, like I told you, they are different per market, and each futures contract control a certain amount of money in that commodity or index. And there are many websites that shows you the value of one point and the tick value and how much you are controlling in capital, when is the expiry date. And you can easily get lost because the exchanges have their own way of presenting that information. And then there are other websites, for example, bar chart, they produce it in a different way. So I compiled a lot of information and gave it to a custom GPT as knowledge resources. And I will share with you now a custom GPT that you can use to learn about every future contract you want. So here is the custom GPT that you can use. It's called statOasis future contract guide. The link will be in the description below. And here are some starters that you can use, but you can ask it anything about futures. So for example, let's go with this one. How do micro futures differ from standard contracts? If you just click on it, so here it tells you that the micro futures are 1/10 the size of the standard futures. So if the E-mini S&P 500 big point is 50, then this one big point is $5. Now this notional value is the big point value times the index. And this is wrong because it says the index is 5,500. And as I'm recording this video, the index is about 6,600, I think. But anyway, this is a custom GPT and you can ask it to adjust. So you can say, give me the same answer, but update the value of the index using the web. So let's try it and see what we get. So you see now it's searching the web and it's going to come up with the, yeah. So see, now it's 6,600. And therefore, every contract is controlling about $333,000. And for the micros, it's about $33,000. And here are some key differences and an illustrative move. So a 10-point move in the S&P 500 translates to $500 in one E-mini contract. Now, for example, here we saw it says notional value. So you can, again, ask it, what is a notional value? And again, it tells you the notional value is blah, 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 whatever you want. So let's say I am interested in energy futures. Can you give me a table of comparison between them? And let's see, absolutely. We have crude oil, we have the WTI, the micro, Brent crude, RBOB gasoline, heating oil, natural gas, and micro natural gas. Again, the tick value, the initial margin, contracts of expiry, trading hours, settlement, and so on and so forth. Here is another example. I want to risk only $22.50 in my trade of S&P 500 E-mini futures. How many points my stop loss needs to be, not buy? And let's see what answer we get. So one contract, it does the formula, and that translates to 45 points. So when I enter, my stop loss is 45 points away from my entry price. And again, an example, optional for scaling. By the way, all this is built in ChatGPT and available on the internet, of course, in a different way. I just trained this custom GPT on all futures data and gave it some resources about futures. And basically, like, it's a narrow path to futures only. So it would not hallucinate or go into different topics and so on and so forth. So now as a beginner trader, really, you don't have any excuse. You, in a week, probably or less, you can get really acquainted with trading futures. You have all the knowledge available for you, and you have the trade simulator to test your trading. Now, the simulator is not about building strategies. It's just about learning to trade futures, see the volume, how much is each point worth, and the expiry, and so on and so forth. And if you get stuck after finishing the courses on the CME Group, you can come to my custom GPT and ask it anything to refresh your information or to answer questions that have been not answered in the courses. For example, when to do rollover. Although my Algo Trading Masterclass teaches all the concepts that apply to every instrument, because it doesn't actually look at the symbol. Everything I teach is based on the chart. But I still recommend that you trade futures because of all the advantages that I mentioned before. In my humble opinion, futures is the best vehicle to be a professional trader or to be a profitable trader. If you like this video, then you will love the next one.